I'm actually afraid. I'm afraid for the first time. And that's a big statement, but I'm afraid for the first time. I've been talking about the then they fight you phase again for over a year. And I've been talking about us versus them and us on the crypto side and the digital side and the Bitcoin side. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming.
On Thursday, BlackRock, one of Wall Street's largest companies in asset management, joined the list of firms seeking to connect investors with the cryptocurrency industry. With assets under management totaling almost $10 trillion, BlackRock's application to the U.S. Securities and Exchange Commission for a Bitcoin exchange-traded fund generated mixed reactions within the crypto community. Some believe that BlackRock's application, given the SEC's high ETF approval rate, could boost crypto asset prices. However, critics argue that BlackRock's business ethics conflict with the values of the cryptocurrency industry. BlackRock's proposed product, the A-Shares Bitcoin Trust, aims to provide investors with convenient access to crypto investments. The filing emphasizes that these shares offer a simplified way to invest, similar to investing directly in Bitcoin, without the need to handle or trade the cryptocurrency. While the SEC has consistently cited concerns about market manipulation in rejecting previous Bitcoin ETF applications, experts speculate that BlackRock's strong reputation as the largest investment manager, along with its partnership with the Bank of New York Mellon as custodian for the trust's cash holdings, may present a different outcome. Other asset management firms, such as Grayscale Investments and Cathie Wood's ARK Invest, have faced SEC rejections for their spot Bitcoin ETF applications. However, BlackRock's collaboration with Coinbase as a custodian, despite the ongoing SEC lawsuit against the US-based exchange, further underscores the potential significance of their application. In a recent episode of Roundup with Blockworks, macro hedge fund manager and crypto enthusiast Mark Yusko discussed the implications of spot Bitcoin ETF applications for the broader crypto space, considering the firms involved in the applications.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
We said it on this show over a year ago, saying no one else will get approved except BlackRock. Yep. The only person who will ever get a spot ETF is BlackRock. And there's a reason, because they're inside the tent and we're outside the tent and anyone competing. But here's the thing. Operation Choke Point, people think, oh, they did that. Oh, no. I understand it from talking to some kind of people on the ground at different projects. There's some bad stuff coming. Actually, what I'm really afraid about is if the SEC does what it appears they're going to do in terms of declaring all of it, except Bitcoin, a security, and anyone who's transacted in any of this stuff is kind of a criminal, that's going to be bad. But where does it stop? Are my Pokemon cards securities now? Is my Magic the Gathering game a Pokemon? I mean, is that a security now? Again, it's not in my best interest to criticize the people who regulate me. I know that. So don't come for me. I'm actually, I'm starting to really appreciate what I've been talking about, which is they, and we know who they are, right? It's JP Morgan, BlackRock, and all of the controllers of the money and power felt threatened, as they should have, by a disruptive innovation that will, because I'm not going to back down from will replace them. Right? The infrastructure of trust will be replaced by the infrastructure of truth. It just will. But man, the war is going to be bloody. The implied ridiculousness of, I had a guy respond to me, this is negative, or no, this is a bad thing. I'm like, no, it's not.
Yeah.
But what they're implying is that money isn't pure. I mean, it's literally like mudbloods and purebloods from Harry Potter. That money's not pure. We don't want that money converting into to Bitcoin. Well, of course you do. You want any and all fiat of any kind and any variety to convert to Bitcoin, because the bigger the network, the bigger the safety, security, the more adoption, the more that's the only way the value of a network goes up. Is there more participants? And so to say that, well, they're the enemy. Well, they might be, right? BlackRock and JP Morgan, I shouldn't accuse people directly, but it's hypothetically possible that since November of last year, when the futures-based ETF was issued, it's entirely possible that those large institutions have been shorting the shit out of Bitcoin. It's entirely possible. In fact, it's highly likely because we have proof in the gold market that they do. And every year they make billions of dollars shorting the future and going long the physical. And it's unbelievable to me that that's okay, right? That JP can pay $1 billion fine, $1 billion, but say, oh yeah, we made 20 billion, so that's 5%. Who cares?
Cost of doing business.
And it's cost of doing business. It's clear that happened for a portion of this downturn, because it's to the day that it started. Now, yes, it was exacerbated by, Sam, and it was exacerbated by, bad people doing bad things, but it just is.
Several prominent figures in the Bitcoin and overall crypto community have taken to Twitter to respond to BlackRock's application. The popular anonymous Bitcoin analyst, Plan B, congratulated Bitcoin sellers, suggesting that they have been selling to BlackRock and front-loading their ETF for the past 2 months. Adam Cochran, founder and partner of CHSB, shared a bullish thread highlighting BlackRock's influence on the gold market. He emphasized how BlackRock's narrative and network transformed the gold market into a $13 trillion industry. Cochran predicts that BlackRock will similarly educate millions of consumers about crypto and change the narrative surrounding its portfolio allocation. According to macro guru Raoul Pal, the ETF may serve as Gary Gensler's way of offering comfort to the cryptocurrency industry. He suggests that Gensler is granting BlackRock the Bitcoin ETF approval while simultaneously engaging in regulatory actions, such as the Prometheum Circus, to demonstrate that he is not entirely halting crypto. Pal views these moves as political, allowing Gensler to maintain trust in Wall Street. Users are encouraged to share their thoughts on BlackRock's ETF application as more clips from Mark Yusko's discussion on the Fed's hawkish pause and its implications for the U.S. economy are presented.
First, we had the dovish hike. I'm like, what the hell is a dovish hike? I mean, the creativity to wordsmith all these words. And look, I don't envy their job. In the digital age, in the social media age, every single word, every action, every body movement, everything, every piece of luggage you carry is interpreted. And so now they've come up with this idea of a hawkish pause. What does that mean? Well, in December last year, everybody said, "Oh, they're gonna pivot. And the stock market surged, and everybody's like, "Oh, this is great." And now we've had this, not incredible, it's crazy. I mean, maniacal. I mean, it's true mania run in some of the tech stocks, particularly around AI, just on nothing. On literally nothing. And in terms of the results of the companies, the tech is great,
yeah.
But Microsoft invests something that's worth 10 billion, and their market cap goes up 200 billion. Or Google promises $1 billion order to NVIDIA, and their market cap goes up 200 billion. Or this company C3 AI. And look, I've been wrong in the sense that this stock literally should be zero. The stock should be zero. Whatever they earn in revenue, they lose. Like, they make 60 million in revenue every quarter, they lose 60 million every quarter. They eviscerate cash. There is no business there. And this stock is up like 400% this year because its ticker is AI. everyone thinks it's OpenAI. And that's just stupid. So the markets lost their mind because of this belief that somehow the Fed's going to, as you said, inject liquidity, but they're not. I mean, save the $300 billion that they did in an emergency around SVB, okay, which reversed a whole bunch of the QT from last year. They're definitely not loosening. They have not, they stopped hiking, maybe. They said maybe there could be a couple more. But they have not reversed, and they have not started injecting liquidity, and they have not stopped shrinking their balance sheet. So it just doesn't make any sense. And if you use the discount rate, the average discount rate of 5.25 today, the valuations are just stupid, right? We've had the S&P multiple expand in a world where interest rates went from 1 to 5. It's completely illogical. If you can do math, right? Which math is hard. That is one of my hashtags. It just wouldn't happen because earnings have gone down, not up. So everything's wrong with that picture. Now, China, on the other hand, quietly, money printer go burr. They're quietly printing money, lowering interest rates. Their currency's off 5%. That's a big deal. Stock market had surged from October, then fell, gave it all back. But now in the last 2 weeks, suddenly is up again because people are like, oh, wait a second. They really are printing money. Their GDP really is going to be back to 6%. They really are focused on growth. Now, my favorite, Michael, is they've got a new bill, broad-based, they call it a white paper, actually, which I think is kind of funny, on crypto, that may reverse the ban. Shocking. No, not shocking. Like I said, China, I've been talking about this for years, China's playing Go. They're playing a different game. The rest of the world is arguing how to set up the checkerboard. They're playing a different game. From the lockdowns, which they fomented around the world. Well, why did they do that? Why did they destroy their own economy for 2 years? To gain market share, to gain a pause, back to the hawkish pause. They gained a pause in activity, pollution, all kinds of things. They had a big reset, and now they're stepping on the gas and sprinting away. They're first to CBDC. They're going to be first to a broad-based digital asset system. I mean, they're kicking our ass. It's funny.
Yeah. Bitcoin had a notable response to the bullish news by reaching a new weekly high on Saturday. However, earlier in the week, the leading cryptocurrency experienced a drop below $25,000, which was attributed to regulatory crackdowns on the industry and Federal Reserve Chair Jerome Powell's announcement of upcoming rate hikes following the hawkish pause. Bitcoin's price declined by around 4% from the previous day, while Ethereum also saw a drop to $1,620, representing a nearly 6% decline from Wednesday's levels. This marked the lowest price for Ethereum since March 13th. With the news of BlackRock's involvement, Bitcoin experienced a recovery on Friday and Saturday, reaching a weekly high of $26,769, its highest price since May 8th. Ethereum also saw an upward trend, reaching an intraday peak of $1,766 to kick off the weekend. What are your thoughts on Mark Yusko's assessment of the U.S. economy and his perspective on BlackRock's ETF application by leaving comments and observations in the comment section below? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.